Most traders think strong moves mean strong trends. They see a big impulsive candle, price runs quickly in one direction, and they assume the market is showing strength. But very often, that fast movement actually hides a problem inside the chart. Because when price moves extremely quickly, the market often leaves behind areas where almost no trading activity happened. These areas are known as liquidity voids. Spotting these areas manually can be very difficult. Fast moves can happen quickly, and once price moves away, it's hard to see exactly where the imbalance was created. That's where this tool becomes extremely useful. Instead of manually searching for inefficient price movement, this tool automatically identifies areas where the market moved too quickly and highlights them directly on the chart. These zones show where liquidity was skipped and where price often returns later to fill the imbalance. Let me show you exactly how it works. To demonstrate the tool, open TradingView and load any chart you want. I'm using the 15-minute time frame here, but the concept works on any time frame and in any market. Once the tool is added to the chart, you'll start noticing rectangular zones appearing after strong directional movements. These boxes mark areas where price traveled quickly without building normal trading activity. In other words, the market moves so fast that buyers and sellers didn't have time to interact properly at those levels. When that happens, the chart develops a liquidity imbalance, and markets often return later to rebalance those areas. Look closely at one of these highlighted zones. You'll notice that the zone forms immediately after a strong move, usually when several candles push aggressively in the same direction. During that move, the market skips over a range of prices very quickly. Those skipped areas become liquidity voids. These void zones represent inefficient trading activity. Because the market didn't properly establish balance in that area, price frequently revisits it later. This is why traders watch these zones carefully. They often act like magnets for price. Another important thing you'll notice is that these zones stay on the chart as price moves forward. This allows you to see whether price eventually returns to the void. When price revisits the zone, several things can happen. Sometimes price enters the void and fills the entire area before continuing. Other times, the market reacts immediately at the edge of the void and reverses. Both behaviors can create trading opportunities. Now, before we get into the actual strategy, let me share something that changed how I trade. You can learn this setup perfectly, but if you're not at your screen when it triggers, you miss it. And that used to happen to me constantly. That's why I started automating strategies like this, back-tested setups that run whether I'm at my desk or not. These work across forex, futures, gold, and they even work at prop firms. If you want access to the exact strategies hundreds of traders are already using, check the first link in the description. Before we look at trading strategies, let's quickly go through the settings. Open the indicator settings panel. You'll typically see parameters that control how the tool detects liquidity voids. One of the most important settings controls detection sensitivity. This determines how aggressively the indicator identifies inefficient price movement. Lower sensitivity will highlight only the largest voids. Higher sensitivity will detect smaller imbalances as well. For most traders, a medium sensitivity works best because it captures meaningful inefficiencies without overcrowding the chart. Another setting controls zone extension. This determines how far the highlighted void extends forward on the chart. Once everything looks clear on the chart, click OK. Now, let's look at how traders often use these zones in practice. Long setup. First, identify a bullish price move that created a liquidity void below the current price. This usually happens when price accelerates upward very quickly. Once the void appears, you wait for price to retrace back toward that zone. As price approaches the void, watch the candles carefully. If the market enters the zone and then starts forming bullish candles again, that can indicate buyers are stepping back in. Some traders enter long when price shows clear rejection inside the void or near its lower boundary. Stops are typically placed below the bottom of the void. Targets can include the previous high or the next resistance level above. Short setup. Short trades work the same way in reverse. First, identify a strong downward move that creates a liquidity void above the current price. Then, wait for price to retrace upward toward that zone. If price enters the void and begins showing bearish rejection, that suggests sellers are defending the area. A short position can be taken once bearish momentum returns. Stops are usually placed above the top of the void. Targets can include the previous low or the next support zone below. If you're a serious trader trying to get funded, you need more than a single tool. You need a full toolkit consisting of elite algos that catch the best moves while avoiding losses in sideways markets. Proven strategies across multiple markets, whether forex, gold, or futures, with a risk management built in, and fully automated systems so you can trade without being at the screen all day. So if you'd like to stop burning your time and account testing random indicators and start using elite tools and automation like all these other traders, click the link below. Different markets can behave slightly differently with liquidity voids. In forex, voids often appear during major session breakouts, especially during the London or New York session. In crypto, volatility creates many small voids, so focusing on larger ones can help filter noise. In stocks, voids formed during earnings or news events can be especially important. In gold, strong momentum moves often leave very clean void zones that price revisits later. Now, if you want to try this tool yourself, the indicator used in this video is called Liquidity Void Detector, created by Zierman. You can find it directly in TradingView by searching for it in the indicators menu. Thanks for watching, and I'll see you in the next one.